GM, it's Blake here. As always, none of this is financial advice. Trade and invest at your own risk. This video is for entertainment and educational purposes only. We're going to go ahead and get it kicked off here with the SPY, the S&P 500. And we got the weekly time frame pulled up here, and you guys can see we are still trading below this declining 50-week moving average. Technically, we are in an uptrend on the weekly time frame. That happened back on November 7th, but we cannot seem to continue this momentum and failing at this declining 50-week moving average. So definitely something to pay attention to. If we start breaking below this cloud, I'd say roughly around 385 for SPY. Yeah, that would not be good for the health of this market. And we could likely see a move back towards 370 and maybe even a test of these lows back to around 350 on SPY. So weekly time frame technically in an uptrend, but failing at resistance. And moving into the daily, yeah, this is really what we focus on for our swing trading approach. And you can see, we've had 5 days closing inside of this cloud below the 10-period moving average, which is our key moving average, as you guys know. And so we're technically still in a downtrend on the daily time frame. So, we have some news coming this week with the Fed and also CPI data. I think those will both be binary events. So, I don't expect a whole lot until we get some clarity on both of those reports. So, yeah, Monday probably not going to be doing too much. Maybe floating around like we've done all of last week. Didn't really do a whole lot of movement. And that's similar with tech as well. A couple things I want to highlight here. Just to kind of show you what I'm looking at. So a few things. First off, you guys know the 200-day moving average, which is this black line. All right. So we talked about this 200-day, and when we had this bullish reversal candle closing back above that 200-day on November 30th, positive sign, didn't get any momentum. You can see we didn't have any sort of follow through and failed at the downtrend line. So this is from the all-time highs back in January, and you can see it's acted as resistance here, here, and once again here. So this downtrend line is significant. I do think that we do need to break above this downtrend line and ideally this 200-day moving average before we can start to feel confident about what's happening with price structure. So ideally, I would like to see price in this area. Sorry, let me move this. I would like to see price, start to trade in this area above the downtrend line, above the 200-day moving average. And then if we could get some momentum to the upside, that would be ideal. That's when I would probably be a lot more aggressively long. And even in the investment portfolio, we might be looking at, maybe potentially some leveraged ETFs as well if we start to see this price structure. Now, I'm not going to predict this. I'm going to wait and see what the market tells me to do. Yeah, but right now, we're in a downtrend. So our number one priority in downtrends, as always, is preservation of capital. So you can see also this horizontal line here, right around 398 on SPY. This is the 0.382 fib retracement from this all-time high, from this low. And you can see, price has really interacted with this level quite a bit. And yeah, we would love to see price get back above this 0.382 fib. But yeah, if we're failing at that right now, and we're in a downtrend, and we're failing at this 200-day, and we failed at this downtrend line. So yeah, odds are favoring lower prices, obviously, since we're in a downtrend. But like I said, this week we have two binary events, CPI and the Fed, and that's really probably going to determine which direction this market wants to go for the rest of this year. Now, we are wrapping up the final couple weeks of this year. I mentioned a couple times, the year's pretty much over. All right. So this has been, a very difficult year to trade. We had, maybe 1, 2, 3, 4, 5 good uptrends this year. It's about normal. We typically get, 5, 6, 7 good uptrends per year. And that's what we got this year. So 2023 is a new year. Right now, in my opinion, the trading year is pretty much over. And I'm not trying to press and do too much trading into this year. If you've had a good year, great, fantastic. You don't want to give back those gains. especially since we're in a downtrend below the 200-day, failed at this downtrend line, right? And if you've had, a bad year, you definitely don't want to make it any worse. So my suggestion, and once again, none of this is financial advice. You guys trade and invest however you want. But for me personally, what I'm going to be doing is I'm going to be watching and seeing if price can get anywhere in this area, right? So if we can get above this 200-day, above this downtrend line, maybe even confirm price strength above this previous candle's high, yeah, that'd be pretty constructive, and that price action would be, constructive price action for the market, and odds would favor higher prices. So until we see this, yeah, I'm not really trying to make up for anything that I missed on this year. And so, yeah, play it safe this week. We have two binary events, like I said, and now is the time to really be reviewing this year's trading and not pressing, right? So this is what I'm looking at for SPY. You guys know what I'm looking at. Basically, 398 is that 0.382 fib. We get above there. Hey, positive signs, but we do have that 200-day resistance right around 402, 403. And then we've got this downtrend line. Okay, so we've got three key levels that we need to clear for price to move above before we can feel comfortable getting, aggressively long. On the downside, right? So, we can see we've got a lot of horizontal trading action in here. And if we start to break below, last week's low, probably not going to be a good sign. You can see we've got this gap in here to be filled. So, like I said, do not be pressing towards the end of the year. In my opinion, the year is pretty much over. And if the market gives you a signal, and my signal is if it gets in here, that would be a positive signal for me to go ahead and get long. So S&P, these are some of the key levels that I'm looking at. As you guys know, the Dow Jones has been leading. We're still above this 200-day moving average. We broke above the downtrend line, but it's, lately it's been relatively weak compared to the rest of the market. So the Dow Jones, still the outperformer on the year. If we take a look at the higher time frames like the weekly, we're above the cloud. We held the 200-week moving average. So Dow Jones is relatively stronger than the rest of the indexes, which is why we do have a decent chunk of our portfolio in the Dow Jones. And then also, let's take a look at XLV healthcare. You guys know we do have a position in healthcare. Let's take a look at what healthcare still looks great. So this is why we have a position in XLV. Yeah, above the cloud, we have the 10 crossing through the 50-week moving average. That's obviously a positive sign. The higher time frame monthly as well. Let's take a look at that. Yeah, pretty much we're back in an uptrend on the monthly time frame, and potentially testing new highs. But this is definitely going to trade in accordance with the overall general market. Okay, so the market wants to roll over. It's going to take everything with it. And so, what we're really trying to focus on is relative strength and being in the sectors and the indexes that are showing relative strength. So that's what we're really trying to do here. And yeah, obviously XLV is showing relative strength. So I still like XLV. You guys know we were in energy. We got out of energy when we started to top out up here. Yeah, and we had to stop around, 87. Never let it get quite that low. When we started closing below here, we blew out the position. And yeah, this is looking like it wants to potentially come back and test this 200-day right around that 80 level on energy. XLE has been the, outperformer on the year. Looks like, topping pattern, double top. But if we can get back above the cloud, obviously it might be something that leads again. So, we're not going to turn our back on it. Obviously, it's still going to be on our radar. But right now it's not in our portfolio. Now, technology, just to wrap up, technology has been relatively weak, pretty much this entire year. Very far deviated from this 200-day moving average. Didn't even test it. You can see the SPY actually did test it, actually closed above it. NASDAQ didn't even come close. Okay, so showing relative weakness, and that's not really what you want to see. You guys know I love when tech leads. Tech has been lagging, and it's showing in the market. Finally, obviously we got to take a look at crypto. You guys know I'm a big advocate for crypto. I think this is a game-changing technology, and this can definitely go lower, I think Bitcoin could see obviously lower prices. We're in a downtrend. We've seen this pattern of breaking up trends and breaking lower, break uptrend, break lower, uptrend, break lower. So, I don't think that we can call that the bottom is in on crypto, especially if the bottom is not in on the overall market. I think it's obviously going to have a, ripple effect to, the more speculative assets. But yeah, Bitcoin and Ethereum not looking too hot right now. Just kind of been trading sideways since, this entire month, really. That said, I think that if your investment time horizon is anything more than 3 years, I think these are fine levels to accumulate in dollar cost average. All right, so just to wrap it up, S&P, guys, at the end of the year, don't try to be a hero. Don't be pressing long or short here. We've got some key levels that we need to get back above. And like I said, if we close below last week's low, we've got some gaps to fill below. This week we do have CPI and also Fed, and those will be binary events and will likely dictate the direction for the rest of this year. I'll see you guys on the open. Take care.